In this presentation, I'm going to talk about penalties that an employer might have to pay if they don't comply with all the IRS rules and regulations. A lot of these have to do with, let's see if I can zoom into here a little bit, but a lot of these have to do with if you don't file your employment tax returns like your 941, if you don't pay your taxes when they're due, or if you don't make timely deposits. So this is number 2 is fully pay your taxes when due. So this would be like if you don't pay all of them, and then number 3 is if you don't make a timely deposit. A lot of times if you don't pay it fully, guess what? You also haven't made a timely deposit. So a lot of times number 2 and 3 here kind of go hand in hand. There's also penalties. I'm not going to get too much into detail about this. If you don't furnish your wage and tax statements, that would be like your W-2s to your employees. Or if you don't file or provide information returns, that would be like 1099s to your independent contractors. Or if you don't supply identification numbers. So I'm mostly going to talk about numbers 1 through 3 today. So the first one I want to talk about is failure to file employment tax returns. So this would be if you do not file your 941s, or later on we'll learn about 940s when we're talking about food tax. So this is if you do not file those employment tax returns. Notice here you're going to have a 5% penalty of the net amount of tax that should have been reported, less any amounts timely paid, and then an additional 5% for each additional month or fraction of a month during which failure continues, not to exceed 25%. So I have given you a Word document in Angel called Penalty Problems, and so we're going to work on a few of these problems. So the first one has to do with our failure to file employment tax returns. So let's look at it. An employer files his employment tax return 20 days after the due date of the return, and the amount of tax that was unpaid is $6,000. What's the company's penalty for failure to file the employment tax return? So if it's just 20 days late, if we look back, they get a 5% penalty of the net amount of tax that should have been reported, less any amounts timely paid, and then an additional 5% for each additional month or fraction of a month during which failure continues, not to exceed 25%. Well, here we're only 20 days late, so we haven't even gotten to a month late yet, so the penalty would be 5%. So what we'll need to do is we'll take $6,000 and then we'll multiply by the 5%. So the $6,000 is what we did not report, and then our 5% is our penalty, and so that would be a $300 penalty. What if it was 35 days late? Here we are over a month, and so therefore we're going to add an additional 5%. So again, it's 6,000, but we've got 5%, and it's not a whole other month overdue, but notice that it says for an additional 5% for each additional month or fraction of a month. So we're over 30 days, so that means that we are an additional fraction of a month over. So we're going to multiply that 5% times 2, or 10%. So therefore we have $600, okay, of a penalty. Now let's look at our next penalty. So the next one we have is failure to fully pay employment taxes, okay? So in this case, what I've got is we've got a 0.5% of the amount shown as tax on a return per month or fraction of a month, not to exceed 25%, okay? And also down here, we've got, in addition, any taxes due will bear interest at a rate of 3% per year. So this 3% is an interest rate, and it's an annual interest rate, okay? So we've got a 0.5% of the amount shown as tax on a return per month or fraction of a month, not to exceed 25%. So it's 0.5% for each month or fraction of a month that it's late, plus you've got this 3% interest. So again, this is failure to fully pay employment taxes. So let's look at an example of that. So a company failed to pay its employment taxes of $5,000 for March. It's due April 15th until May 20th. What is the amount of the penalty for failure to pay their taxes? So first let's look and see how late is it. So they were supposed to pay it on April 15th, but they didn't pay it till May 20th. So let's see how late that is. So our days late, well, we've got in April, how many days late were they? There are 30 days in April, and we were supposed to pay it on the 15th. So in that case, we're 15 days late in April. And then in May, they didn't pay it for another 20 days. So that means I'm 35 days late. Okay, so I'm over a month late. I've got a whole month and a fraction of a month. So what I'm going to do is first I'm going to calculate just the penalty part. So this would be, I'm going to take my 5,000 that is late times 0.5% times 2. And so when you do that, you should get $50. 0.5 can also, you can put that into your calculator as 0.005. Okay? And then I've got my interest. In this case, again, it's 5,000, and my interest rate is 3%. And then this is an annual rate. So I am only worried about 35 days of my year. So I'm going to multiply that by 35 over the number of days in my year, or 365. So for that, my interest is going to be $14.38. If I add the two together, then I get $64.38 is what I owe the IRS. Okay. Now let's do one more. Let's look at my failure to make timely deposits. So this is if I didn't make the deposit on time, then we're going to have these. If it's made 1 to 5 calendar days late, then it's just going to be 2%. If it's 6 to 15 days late, it's 5%. If it's made 16 or more days late, then it's 10%. Okay, so you get the gist of that. So it kind of depends on how late you are as to what percentage penalty you have. So let's go back to the penalty problems. And so number 3, a company must make a deposit of $1,800 on June 15th. The deposit was made 12 days late. What's the penalty assessed against the company for failure to make a timely deposit? So if we go back, we're 12 days late. So if we find 12 here, we have a penalty of 5%. So we go back. So I've got $1,800 that I owe, and I owe them another 5% penalty. So that would be another $90 that I owe. Okay. So then what I'm going to do is I'm going to do a problem for you where we kind of do a bunch of them together, because this is more real life. A lot of times, if you haven't fully paid your taxes, guess what? You also didn't make it timely. Okay. So a lot of times you're going to have both this penalty plus this penalty to pay. So that's what I'm going to do an example of now in number 4. So Vulcan Company is a monthly depositor whose tax liability for March 2014 is $25.05. 1, what's the due date for the deposit of these taxes? If it's from March and he's a monthly depositor, then when do we have to when should he have paid the taxes? Should have been April 15th, right? Okay. So assume that no deposit was made until May 2nd. So compute the following penalties. So first, let's figure out how late is he, okay? So if he was due April 15th, he didn't pay till May 2nd, so he didn't pay the rest of April. So in April, our days late, we've got 30 days total minus 15 when it was due. So we're 15 days late in April, and then we didn't pay till the 2nd, so that means we were 2 more days late in May. So I'm 17 days late total. So the first thing we're worried about is the failure to make a timely deposit. So that's going to be on my page 3 here, and I've got failure to make a timely deposit, and I'm 17 days late. So deposits made 16 or more days late, that gets a 10% penalty. So here I'm going to come and I've got $25.05 times 10%. So that's going to be $250.50. Okay. Then the next penalty I'm worried about is I didn't fully pay the tax on time, did I? So I didn't fully pay the tax. So therefore, I'm going to come here. I've got to find that. That's my 0.5%. And I'm not over a month, so it's just the 0.5. I don't have to multiply that by 2 because I'm only 17 days late. I'm not over 30. And then I've also got an interest of 3%. Okay, so let's do that. So my penalty for failure to pay the tax, I'm going to take 2505 times 0.5% or 0.005, and that's going to give me 1253. And then I've got my interest. Remember, my interest is 3%, so I've got 2505 times 3%. But again, that's an annual rate, and I'm only 17 days late, so I only have to pay interest for 17 days. So 17 out of 365. If you do the math there, you should get 350. So my total, if I add all three of these up, 250.50 plus 1253 plus 350, I should end up with a total of 266.53. And that's how you do penalties.